Got the latest investor check-in from Investopedia. Editor-in-chief Caleb Silver is here with the results of his most recent survey. Caleb, it's always good to see you. What sort of shocked me was that your readers, the participants in the survey, are finally coming around to this rally.
Yeah, they're warming up to it. It took them a little bit over a year. Actually, in December, they started warming up a little bit more. But now we've seen them as bullish as they've been pretty much in the last 12 months. Timing is everything. Of course, this was all closed yesterday, pre-Fed today, but they were feeling confident. Now, not ragingly confident, but more people are investing than they were back in November, for sure, certainly than earlier in the year. 33% are making safer investments. That's down from 50%. So they want to get involved here, and they're really favoring stocks and ETFs.
Are they still favoring Magnificent Seven big cap tech stocks, or are they going more towards CDs and things like that?
No, they're back to stocks and their favorite stocks, the biggest stocks out there, the most widely held stocks out there, the ones that are getting punished the last couple of days, except we've seen a couple of companies enter the top 10, like AMD, some of the chip makers, a little bit more popular now, some of the banks falling out.
Presidential election in November, 60%, that's the top worry for investors. Is that historically what happens in a presidential election year, or is that skewed higher this year?
That's skewed higher this year. It was higher 3.5+ years ago. I think they're worried about the unrest, not who will sit in the Oval Office, but what chaos will that bring with it. And that was high in November. It's just getting higher. I expect that to keep climbing. They're less worried about inflation, obviously. They're worried about the geopolitical environment. They're worried about relations with China right now. They're worried about the war in the Middle East. But the election kind of front and center in their psyche, not affecting trading, but affecting sort of the overall psychology.
Have you done any work on, flows tend to follow returns, right? So it's not surprising, I think. Market goes up, all of a sudden you get investors want to jump in. Have you done any work on what that means for the market? Is it a contrarian signal? Is it a bullish signal?
Yeah, sometimes we're, as individual investors, a little bit late to the party. You may argue maybe they are right now, or maybe they finally feel like it's a little bit safer. But if you still look at what they're buying, there's a lot of investors, and there are mostly older, my age and older investors, individuals, self-directed. They're protecting themselves with money markets and CDs, but right now they're definitely favoring risky assets, maybe not Bitcoin so much, but certainly stocks and definitely big stocks.
So back to the money markets, though, and treasuries. Is that money coming out, and is that the next wave for the stock market? Because I kind of feel like as you see markets go higher, the FOMO that's coming in this community, and they were defensive, they did the right thing, they made a little money, but that money seems to be ready to roll.
Absolutely. 5% was nice, but now it's not as cute when you're getting those 24% last year returns in the S&P 500. And you guys know, good years usually follow great years. There's a lot that can happen here right now. So they do want to protect themselves. But again, these are self-directed, active investors that want to trade. Talk about trading activity. I was just looking at VandeTrack earlier. Flows and buys and activity by retail investors lower now than it was last month when this rally was really picking up, higher than it was pre-pandemic, but we're nowhere near where we were in 2021 and probably won't get back there until we see a big event.